Good evening, I'm Agam Vakil and you're watching What Did You Miss on Bloomberg Quint Live, where we bring to you the highlights of the day that went by. But first, let's get straight to the headlines. So the Sensex and the Nifty fall the most in over a month, dragged by pharmaceutical and energy shares. And Lupin stocks falls the most. In fact, the highest in 19 months after the US pharma watchdog sends a warning letter on two plants. And Henkel decides not to exercise its option to buy 26% stake in Jyoti Laboratories, sending Jyoti stock plunging to its lowest levels since August. And Cipla beats estimates in the second quarter. Profit surges as much as 19%, while a fourfold rise in other income also pushes the revenues higher. Well, that's as far as headlines go, but it's been a very, very tough day of trade. While the index itself has also fallen by as much as well over 100 points. To take us through what has been and how this trading day has been, we are in conversation with Pradeep Pandya. Pradeep, take it away.
Rates like Reliance have been really pulling the index down today. Both Sensex and Nifty ended the day very close to the day's low. No respite even in the last hour of trade, as you would normally expect after a fall of 100 plus points in Nifty. But there was no bounce actually worth talking about. Even mid-cap and small-cap, over last few sessions also we had seen some amount of pressure towards the end of the day. Some profit booking was seen in mid-cap and small-cap. But volumes really built up significantly today. And market breadth in fact remained negative for most part of the day. So that kind of shows, momentum building on the negative side. If you look at the worst sector, that was definitely pharma and healthcare, with that warning letter that Lupin received. Not only the stock of Lupin corrected 17-18%, but the entire pharma sector, in fact, saw a severe correction. Even Cipla, that came out with a decent number that actually met market expectation, but stock still got hammered, ending the day with a loss of 7 to 8%. Finally, also, the other key sector that was under pressure were PSU banks, SBI, PNB, even mid-caps like OBC, and private sector banks like Yes Bank came under severe pressure in today's trade. Some more stocks that were in news actually, Jyoti Lab fell after Henkel refused to exercise the option to extend to increase the stake in the company, and also Just Dial lost after weak numbers. On the positive side, we had I would say lone crusader, that was IT, the only sector that ended the day in positive as far as index heavyweights are concerned. HCL Tech and Infosys were the leading stocks in this segment, and there were a few more stocks. NBCC managed to move up in today's trade following the Bank of America report that was positive, and Arun, where traders have been buying in anticipation of a key corporate development.
Well, thanks for that, Pradeep. Pradeep just mentioned the drop in Lupin. In fact, that's dropped the most in 9 years, as you can see there. And after this, the drug maker said that the US regulator has issued a combined warning letter for its Goa and Indore Unit 2 plants, a move that may delay future drug approvals. And for that, Darshan Mehta brings us the pace on the story. Darshan, how can this affect Lupin, if you can take us through the repercussions of this development?
So that's a huge blow for Lupin, given the fact that in the earnings call as recent as last month, the company had indicated that they are hoping for an early resolution for both their Goa and Pithampur plant. Now the US FDA has come out with a warning letter, and that's taken the trade by surprise. What has happened is Lupin in communication to the stock exchanges has indicated that they've received a combined warning letter that is for the Indore plant as well as their Goa plant. Initially there was this Form 483, so Goa had 3 Form 483 observations, while the Pithampur or the Indore plant has 6 Form 483 observations. Now what a warning letter means is that the existing products can go from this facility, but no new approvals will come in. And how is this deterrent for Lupin, given the fact that more than 50% of their US sales, or close to 20% of the US sales, happens from these two plants. Now there are certain products that Lupin has, and it is facing immense competition there, and it is facing a lot of slowdown, and that was quite visible in the financials of the company. Now with this warning letter coming in, it becomes very difficult for Lupin to manage the fall as far as some of these products are concerned, at the same time not getting any kind of approval. So the analyst community does believe that EPS downgrade and EPS count is something that is very possible for Lupin going ahead.
Well, thanks for that, Darshan. And it wasn't just a bad day for Lupin. We saw severe cuts coming in for Jaitley Labs as well. This is Henkel decided not to pick up stake in Jaitley Labs, and Henkel had the option to buy up to 26% stake in Jaitley Labs for over 5 years now. And Charlene D'Souza joins us on more, details when it comes to this development. Charlene, what are you picking up right now?
Okay, so now the German FMCG major has decided not to exercise its option to pick up to 26% stake in Jaitley Laboratories because this deal was signed way back in 2011 when Jaitley acquired a majority stake in Henkel AG's India operations, and where there was this pact where they could acquire up to 26% stake 5 years hence, and that option was open up till March FY17, which was further extended till 31st October. Now that the company has very clearly stated today that the company will not go ahead. However, in its investor presentation, the company has said that the licensing agreement will continue for Henkel's products, which are Prill and Fa, and both the companies are mutually exploring other opportunities to work together.
All right, thanks for that, Charlene. Of course, moving from one terrible day of a stock to another, and this time is Cipla. And you know what? It's posted a healthy quarter for the September, earnings, and with profits beating the street expectations, along with the fact that we've seen an improvement in not just the bottom line but also the top line. But Darshan Mehta is here to take us through the numbers. Darshan, what do you have for us when it comes to Cipla? What stands out?
So pretty strong financial performance from Cipla. If you're looking at the top line growth of 9%, coming in at almost 4,082 crores versus our estimate of close to 4,000 crores. The profits came in line with what we were anticipating, but it's a strong operational beat that has happened for Cipla. EBITDA coming in at 804 crores versus 756 crores. That was our estimate. That means a margin of 19.7% versus an estimate of 18.8%. So close to a 90 basis point beat on the margins. Now, basically, there are other income is much higher at 113 crores compared to almost 2,700 crores, but that is actually offset by high taxes this time around. So the tax rate is 24% versus 16%. The Indian markets didn't grow as much as the street would have wanted. A 12% YOY growth and a 30% QOQ growth. Cipla says because of the post GST adjustment on a like-to-like basis, the India growth will be close to 19%. North America revenues were down both on a year-on-year basis and quarter-on-quarter basis. That is not something that is good for Cipla. But apart from it, double-digit revenue growth for Europe, emerging markets, as well as the API business. So overall, financially, very strong performance from Cipla. We need to now find out what the management has done as far as the R&D expenses are concerned to get an indication of whether it was a lower R&D expense that actually caused the beat for Cipla on the EBITDA front. But nevertheless, if you just take a look at the financial itself, decent performance from Cipla this time.
So it's a good quarter from Cipla, but let's move on to the Nifty earnings in general. And 3/4 of the Nifty has already reported numbers, and it's largely in line. And with that, we also understand that a lot of this is largely priced in. We have Yatin Mota standing by with the scorecard of the earnings so far, and also some sectoral trends. Yatin, take it away.
Well, if you look at the Nifty earnings so far, they have been satisfactory. In fact, in the last few quarters, we have seen the best trend emerging for the second quarter earnings, wherein the disappointments are quite less as a percentage of the overall universe. Talking about the strong results so far, 36 companies, including Cipla, has reported the overall earnings strong. The 8 companies have been reporting strong earnings. In line, a majority of them, a little more than half, have reported in-line earnings. Of course, only 7 companies out of these 36 companies have reported slightly lower than estimated earnings. As far as the bar chart is concerned, just have a look at it. The kind of strong results that we have seen have been lower, but on an overall basis, if you look at the strong results versus the inline results, we have seen almost 28 companies report in that particular segment. Of course, 7 companies so far have disappointed with the overall earnings. Now, let's see the overall heat map as to how really the earnings have shaped up for most of the companies. We have companies like Maruti Bajaj from the Auto Pack, which have surprised on the margin front. Good operational results coming in for the Auto Pack. Ultratech, Tech Mahindra, Z, Dr. Reddy's, Bharti. These are the few companies which have seen good gains as well as good returns coming in. after the quarterly earnings have surprised on the positive side. However, companies like Kotak Bank, HDFC Bank, in the IT pack, we have Wipro, HUL, ITC, Asian Paints from the FMCG pack have reported earnings which are largely in line with the street expectations. However, companies like ONGC, IOC, so the oil marketing pack as well as the oil and gas pack have disappointed with earnings. Of course, Yes Bank and Axis Bank, because of the asset quality issues, have reported below expected earnings. And Tata Steel, Bharti Infratel and UPL are the others wherein there was some disappointment coming in. But on an overall basis, so far, be it the hits and the misses, probably we have the hits better than the street expectations.
Well, thanks for that, Yatin. And moving on from the Nifty to a stock which used to be a part of the Nifty a very long time ago. And there seems to be no end to Reliance Communications' debt worries. And in a sign of increasing stress, the Anil Ambani-led telecom operator misses an interest payment on its bond. An Arcom bond plunges to a record low after it failed to pay the coupon. Vishwanath Nair joins us on the show to take a closer look at the stress on Arcom's books. Vishwanath, what do we have for us?
So Agam, what has happened was that the interest payment was due on Monday, about $9.75 million. That is what the Bloomberg story has said. So that was due on Monday, but the company said in a notification on the stock exchanges that because it is under standstill agreement with the lenders till December 2018, it is not going to repay any lenders or bondholders. So it made it very clear on Monday that it will not be paying any of its bondholders the coupon that is due. Following that, on Tuesday, we saw the price of this bond plunge. The bond will be maturing in 2020 and carries a coupon rate of about 6.5% on a $300 million fundraise. So this is a part of a broader story that is emerging out of Reliance Communications, where lenders in all capacities are facing a lot of struggle in trying and finding a way to recover their money. In June this year, the domestic lenders as well as some of the international lenders had gotten together and approved an SDR plan, a strategic debt restructuring plan, which allowed the lenders to convert some part of the debt into equity, subject to conditions that the Aircel merger had gone through and the tower deal with Brookfield had gone through. But both these deals are currently on shaky grounds. The Aircel merger has failed. The tower deal with Brookfield, as the company by its own admission says, it is being renegotiated with Brookfield as well as some of the other players. Some of the conditions behind that approval for the SDR has gone off the rails, and now the lenders are asking for a new resolution plan, which the company has submitted. And after talking to a few of the bankers, they've confirmed to Bloomberg Quint that they are not happy with the plan that has been submitted to them on the 30th of October, and they've told the company to go back to the drawing board and come back with a better plan. So that's where it stands at this point in time. Until this resolution comes across, you can't expect much from Reliance Communications in terms of its debt repayment and its ability to repay some of its bondholders also.
Well, thanks for that, Vishwanath. Of course, we will be watching out for further developments from Reliance Communication. But moving on to demonetization, exactly a year ago, that is when that exercise did take place. But tomorrow marks the first anniversary of the Indian government's demonetization experiment. While the jury is still out on whether the experiment was a success or not, we at Bloomberg Quint get you a very important voice on the matter. Ira Dugal caught up with the professor of economics at Harvard University, Ken Rogoff, and started by asking him how he viewed the government's decision on November 8 last year to scrap the high-valued currency notes, wiping out 86% of all currency just in one stroke. Listen in.
Obviously, I was quite surprised. I didn't have any word that this was going to happen. My own plan for reducing the use of cash involves doing it very slowly, and not to seize the currency out there, but just to make it more difficult to use cash to do large-scale transactions. I think that can be achieved. The trouble with doing a surprise attack, as India did, is the collateral damage is so much that you can't really squeeze out the black money. You can't, you don't have the time, you don't have the people to try to sort through everything. But I must say, a year later, it's been a bigger political success than I might have imagined. And if the Prime Minister continues to capitalize on that to try to root out corruption, to try to make the Indian economy more efficient, it could end up being judged a success.
Professor Rogoff, as an economist, can you sort of explain to us how this process works through the economy? You have a sudden shock which takes away a large amount of your cash in a cash-driven or a high-cash economy like India. Typically, how would you have expected it to play out through the economy, sir?
Well, you would expect that it would hit economic activity because India, although it's moving towards more credit and it's taken some very important steps that the rest of the world hasn't in financial inclusion, in giving ordinary people debit accounts, it's not there yet. So you'd expect economic activity, particularly in the informal economy, to contract a lot. As in the event, the Indian people seem to have been incredibly creative. In fact, it reminds me somewhat of when a similar event happened in the United States in the Great Depression. Franklin Roosevelt, the new president, closed the banks when he was elected in the early 30s. And people didn't have access to cash. They didn't have access to their checking accounts. And yet the Americans, too, were very creative back then in continuing to do their business. The Indian change was even more dramatic in some ways. And it's really a surprise the damage wasn't much more.
Professor Rogoff, before I come to how the economy has responded, so, whatever, few experiments with demonetization we have seen across the world, even in India way back in the 60s, all of them seem to be driven by a very specific purpose or a very specific problem that the economy had. In some cases, it was hyperinflation, for instance, in some of the African nations. In India, one could have argued that there was no pressing need to do something like this. Would you agree with that, sir?
Well, I do think there's a very strong case to move India towards an economy where there's more financial inclusion, where credit and debit cards and telephone payments are used more. I think it would help with tax collection, especially with the new gross sales taxes. It would help with reducing crime. It would help with reducing corruption. It's a question of how. I think the lessons from India are that all in all, it should be done more slowly. But it definitely something India needs as much as anyone, but it's very hard to do overnight. This is something that takes a long time, a lot of slow, gradual changes. Perhaps, again, this is something the Prime Minister understands the politics much better. The drama with which he did it, although causing short-run hurt to the economy, may have helped energize some of these changes in the long run.
Could the central bank, Professor Rogoff, have taken measures at the same time that demonetization was announced to sort of dull the economic impact? Some had suggested that maybe you need to encourage, flow of credit through the informal sector to make up for that period of time where there was a shortage of cash. To your mind, is there anything that could have been done which was not done, which would have eased the economy into this process a bit more?
Well, really, by far the big thing when you do an exchange of cash is you need to have the new cash printed to exchange for the old cash. But printing currency is very technical. You don't want to make it easy to counterfeit. And so they didn't have a big supply, a nearly sufficient supply of cash on hand. That was not the central bank's fault. That was a decision that the government made. They didn't want word to leak out that they were printing money. But the big problem that India experienced in doing it so fast, by far the major problem, was they didn't have new cash printed to replace the old cash. Once that took place, things were a lot calmer.
Professor Rogoff, a year later, we now know one thing, which is that 99% of the cash came back. To you, what does that suggest? And then I'll tell you what the discourse here is. But to you, what does that suggest that all the money that was extinguished has come back into the banking system?
I think that was very hard to avoid because the problem is when you're doing something so dramatic that affects the economy so much, there's collateral damage going on all over. So in the end, the government isn't able to tediously check everyone as they bring cash back. That part of it's just not realistic. The real object should be to try to restrict the use of cash in the future, to make it more difficult to buy a house or an apartment, to make it more difficult to avoid taxes. And I think this is a step in sort of shaking things up, making people know that the government's committed to trying to restrict the use of cash. But I think the idea that you would be able to seize the black money is too optimistic. It is an old idea. An American, James Henry, who advocated this kind of idea in the mid-'70s, suggested exactly that, for the United States to do things the way India did. In my book, I think that just won't work, and I recommend going very slowly. So I don't regard that in itself as a huge defeat, although, of course, from a public relations point of view, if the government had said they would accomplish that, it is. They say they will still be able to identify bank accounts. They'll still be able to root out some of the black money that found its way into the banking system. I don't know the technical details of that.
Professor Rogoff, what they are attempting to do now is, the income tax department seems to be scrutinizing a lot of the cash accounts, etc., to see whether some of this money can, be weeded out. Would you advise against that? It seems like some would fear it's becoming a bit of a hunt for a needle in a haystack, which you, lost somewhere along the way.
Well, I simply don't know the technical details. It's probably helpful in the extent that you want to discourage this kind of activity in the future. You want to make people more nervous about doing big transactions in cash, make them worry what might happen in the future. So perhaps from a long-run sense, it's helpful. But again, I don't know the details. It's very hard to do this in a detached, balanced way.
And the Finance Minister, Arun Jaitley, has come out with a strong defense of the highly controversial move. And Jaitley said that the government's bold decision was a watershed moment for the Indian economy and that it was necessary to shake up the status quo in the system. He also added that the move helped in the transition towards a digital economy.
More money in the bank, more money in mutual funds, more money in the capital markets, more money in insurances. और ये अपने आप में फॉर्मल इकोनॉमी में अधिक साधन जाए उसके संकेत में जाता है. कोई डिमोनेटाइजेशन वन ऑफ सॉल्यूशन है कि इससे सारा समस्या हल हो जाएगी, ऐसा नहीं है. लेकिन इसने एक एजेंडा बदला और उस बदले एजेंडा में लेस कैश इकोनॉमी की तरफ हम जाएं.
Well, the Delhi Chief Minister Arvind Kejriwal has asked Education Minister Manish Sisodia to consider shutting schools for a few days in view of the toxic pollution levels in the city. And the Indian Medical Association has also appealed to the Delhi government to put a bar on outdoor activities in schools to prevent the city's severely polluted air from impacting the health of the children as temperatures drop in the national capital region. The Pollution Control Board has constantly been recording a sharp dip in air quality. A thick haze and dense smog envelope the city early in the mornings when children step out for school. And a special CBI court in Delhi, which was supposed to pronounce a judgment on the 2G spectrum cases, has now deferred the hearing for the 5th December. And the key names involved in the scam include former Union Minister for Telecom A. Raja and DMK MP Kanimoy. 2 out of the 3 cases were filed by the CBI and the third by the Enforcement Directorate. Judge O.P. Saini deferred the hearing, saying that the judgment wasn't ready yet. And the second leg of the US President Trump's Asia tour took him to South Korea. North Korea's nuclear program remains the top agenda as President Trump called upon North Korea to give up its nuclear missiles program. Addressing a joint press briefing with South Korean President Moon Jae-in in Seoul. And Trump said that he saw some progress with regards to the North Korea, but declined to comment on holding direct talks with Pyongyang besides North Korea. And Trump batted for fairer trade agreements with South Korea and complained that the trade deals with Seoul have not been very useful for the United States. Trump also thanked President Moon for asking his trade negotiators for work for a much better deal.
I feel confident that we'll be able to reach a free, fair, and reciprocal trade deal as we renegotiate our current 5-year-old trade document. We cannot allow North Korea to threaten all that we have built. And we built it very much together, and we're very, very proud of it also together. I would like to thank President Moon for instructing his trade negotiators to work closely with us to quickly pursue a much better deal, a deal that frankly has been quite unsuccessful and not very good for the United States.
And the Television Academy, which hands out the Emmy Awards for TV shows, has voted to expel producer Harvey Weinstein in the wake of numerous allegations of sexual harassment and abuse against him. The Television Academy says its leadership voted on Monday to ban the producer for life. Harvey Weinstein's former company, the Weinstein Company, is also responsible for the hit TV series like Project Runaway. The expulsion is the latest following a string of expulsions from other organizations, and the Academy of Motion Picture Arts and Sciences and Producers Guild have also revoked Weinstein's membership. The Television Academy says it's also speeding up a review of its code of conduct for the members. But that is all that we have on this edition of What You Miss. Stay tuned in a Bloomberg Quint.